Ukrainians have been thrown into a state of war as Russia invaded the country in the early hours of Thursday morning, with explosions heard across the country's capital and other major cities as the prospect of the most serious outbreak of hostilities in Europe since the Second World War looms over everyone's heads, and the annual rate of inflation approaches 7%. What should you do with your money is a question on many people's minds. Admittedly, this full-scale invasion of Ukraine by Vladimir Putin is almost certain to result in a significant drop in the stock market, and the notion that such a conflict could be contained within Ukraine's borders is a huge misconception. Russian President Vladimir Putin has recognized breakaway regions in the country's eastern regions, which Deputy Prime Minister Sajid Javid says amounts to an effective invasion of the country. The likelihood of things spiraling out of control is extremely high. Is it, however, ethical to profit from war? Amid the threat of imminent bomb blasts and Russian invasion, the people of Ukraine are losing sleep, and benefiting from a situation of this magnitude appears to be the wrong course of action. In this day and age, when the investment world is changing as a result of ESG, environmental, social, and corporate governance, investing, ethics, and morals are beginning to weigh heavily on investors' minds as they consider their financial decisions. To keep up with the growing popularity of impact investing, some fund managers are divesting their portfolios of betting, cigarette, and fossil fuel corporations. By impact investing, we mean making a profit while also having a positive social or environmental impact on the companies and funds that we invest in. Although Big Pharma still has its detractors, many who bought vaccination stocks during the pandemic would feel self-satisfied knowing they were helping a good cause. Headline-driven markets carry a certain degree of risk as well. You're only one Russia is open to dialogue news away from losing money in the stock market, as the markets can quickly change their minds. During these periods, professional investors employ a wide range of complex proprietary trading tactics to protect their assets. Even if gold prices are surging, it's important to keep in mind that not everything that shines is gold. Here are some ways to profit from Russia's and Ukraine's conflict. 1. Investing money in oil. In the early stages of the pandemic, the financial markets fell when it became clear how much COVID-19 would damage and disrupt the world's economies. A virus with a high rate of spread would stop people from living their normal lives because of how many people die from it. At the time, governments around the world were putting people in lockdowns to keep them from getting the deadly virus. This had a big impact on businesses and travel. There were no cars, no planes, no trains, no sales, and so on. This meant there was no need for oil. It was agreed that the price of oil would go down because of the demand theory, which says that the price of goods and services in a market is related to how many people want to buy them. OPEC+, a group of countries led by Saudi Arabia, knew that oil prices were going to fall, so they tried to cut back on the amount of oil in the market to keep prices stable and protect the economies of oil-dependent countries. But Russian co-chair of OPEC+ didn't think it was necessary to cut oil supply because the virus hadn't been fully analyzed. So cutting oil supply was jumping the gun. Russia, in its rebellious form, responded by pumping so much oil into the market. People began buying and storing oil around this time, and when the price rose, they made plenty of profit. Being an oil trader or an investment analyst in general means that you understand how geopolitics can affect financial markets, so you should be aware of the history of oil traders and how they have made a lot of money by betting on events such as the 2003 Iraq War, the rise of China around the same time, the 2008 financial crisis, the Libyan crisis, the death of Iranian General Qasem Soleimani from a U.S. drone strike, and the contentious 2018 Venezuelan elections. Today, Russian-Ukrainian situation presents a new opportunity. The energy markets are vulnerable to geopolitics, and commodities may have found additional support in an inflationary atmosphere, so prices for oil and natural gas are likely to climb. 2. Investing in commodity trading. Commodity traders act as the ultimate middlemen, connecting raw material producers, who are frequently located in underdeveloped nations, with consumers in wealthy and rapidly developing countries, making razor-thin margins on massive quantities of trade. As a result of the prolonged conflict between Ukraine and Russia, There is likely to be a food shortage not only in these two countries, but food prices in Turkey and North Africa, which rely on wheat and corn from Russia and Ukraine, are also likely to rise. They are both known as the breadbasket of Europe because they export around a quarter of the world's wheat and half of the world's sunflower goods, which includes seeds and oil. Ukraine also exports a significant amount of corn to other countries. As tensions rise, the worst-case scenario is that these crucial raw supplies, such as food, energy, microchips, metals, and others, are cut off. Because of Western sanctions, Russia's exports, or the payments infrastructure needed to facilitate them, could be affected. As an alternative, Russia may opt to cease some of its own exports, such as gas, in an effort to intimidate its adversaries. War frequently results in a lack of commodities on the market, which leads to higher prices and increased income. Economically speaking, when it comes to supply and demand, profit is the most essential outcome. During a war stuff is in high demand, and the government must meet those requests. 3. Supplying weapons. Military funding has decreased, but war is still a lucrative business. In 2012, the top 100 arms manufacturers, distributors, and service providers sold $395 billion worth of weapons. Only Lockheed Martin, the world's biggest armaments manufacturer, sold $36 billion worth of weapons in 2012. Weapons and training are among the services provided by private contractors, as are logistics and management of military bases. Mercenaries, on the other hand, are unlawfully operating private military contractors. The escalating hostilities between Russia and Ukraine are likely to drive up the demand for arms. During times of conflict, weapons, soldier outfits, and a variety of other supplies are required. Yet, the government is not always capable of providing these accommodations on its own, and thus companies and individuals are sought out to assist in these situations. Selling weaponry and ammunition, as well as clothing and other commodities, can be enormously profitable, with the potential to earn millions of dollars, especially during times of conflict. For instance, during the Afghanistan and United States conflict, the United States government allows citizens and businesses to provide these products and services through U.S. government contracts. And when all was said and done, the United States spent nearly $5 trillion on the war in Afghanistan. 4. Investing in stock market. The Russian invasion of Ukraine, which began late Wednesday night, has sent shockwaves through the financial market this week. The S&P 500 index saw its first correction in over 2 years, resulting in a decline of more than 10% from its previous high, and there is uncertainty about what will happen next. When the market begins to deteriorate, investors may be tempted to overreact and sell their holdings, but experts advised against doing so unless absolutely necessary. Do not take your money out. Don't give up on your investments. Any reaction you have to the situation is more likely to hurt you than help you, was a statement given by a personal finance expert at Personal Finance Club. Of course, the loss of life and devastation caused by conflict is always more important than the fate of our financial interests. It is our hope that this disagreement can be resolved quickly and peacefully. But as the scenario progresses, we'll talk about what you should do in the meanwhile. The general market has recently reacted negatively to inflation reaching a 40-year high, rising interest rates, the ongoing pandemic, and, most recently, the devastation in the Ukrainian economy. Stocks have fallen precipitously since President Joe Biden issued penalties against Russia. And despite the fact that the market opened lower on Thursday, it ended the day on an upward trajectory. On Friday, the stock market began the day of the rise. According to Schneider, if you got up on Thursday and sold your stocks because of the war, you would have lost money to the market. The reaction is a natural part of the human condition, and we are witnessing this play out in the stock market right now. Remember that the market has more than doubled in value since the beginning of the COVID-19 pandemic, which resulted in the stock market decline of more than 30% in March 2020. The likelihood of the stock market collapse has not yet been established as a possibility. Suppose the whole stock market went down in flames, which would mean that no publicly traded companies in the country would make any money. And if that were to happen, the consequences for humanity would be far more terrible than simply a loss of money. We are unable to anticipate whether or not the market will fall, because it has already been determined based on all publicly available information, which predicts that the market will continue to do what it has been doing, which will almost certainly be up as it has been. 5. Investing in cars. Similar to oil, cars are going to get expensive with the ongoing conflict between these two European countries. Since the automobile sector was already struggling from a chip shortage and supply chain issues prior to the pandemic, it was particularly vulnerable. According to the Auto Trader, 1 in every 5 nearly new cars in the United Kingdom is now selling for more than their brand new counterparts, as their valuations have been pushed up in recent years. Russia is one of the world's top producers of metals used in automobile manufacture, including nickel, which is used in lithium-ion batteries, and palladium, which is used in catalytic converters. If it decides to cut off supplies of these metals in retaliation for sanctions, the supply problems could worsen, forcing car manufacturers to seek alternative sources. Although countries such as South Africa and Zimbabwe produce significant amounts of palladium, global demand has been increasing, and as a result, prices may rise as a result. Russia is also home to manufacturing facilities for well-known international companies such as Stellantis, Volkswagen, and Toyota. Factories in the region may find it difficult to operate under sanctions, which could result in a reduction in output and a reduction in the availability of new automobiles. But it would also cause car prices to rise more than they are currently. This can also be used as an investment strategy, similar to that of oil, to buy for less, and as the price rises, you can sell them for a higher price. What do you think about this conflict between Russia and Ukraine? Do share your opinion regarding this situation. So that's all for today. If you have any more questions like these, please do let us know in the comment section. Don't forget to like and subscribe to our channel for more amazing business-related updates and knowledge. Stay tuned.